Hello, and thank you for taking the time to listen to this update about Calgary Foundation's endowment portfolio. I'm Dan Langlois, VP and Chief Investment Officer of the Calgary Foundation. Along with the other members of the investment team, I'm responsible for managing the endowment. The purpose of this presentation is to update listeners on the investment strategy, target asset allocations, as well as fiscal year and performance figures and priorities for the coming year. Our team provides these updates semi-annually, so expect the next one to be posted around November with our third quarter figures and updates. Calgary Foundation is currently entertaining a strategic asset allocation review to ensure the endowment maintains an optimal balance between public and private assets in support of its return objectives. These reviews are conducted every 3 to 5 years. As the process is still underway, no changes have been made to the target asset mix since our last presentation. However, you will see a few notable allocation deviations from our target asset mix. We continue to maintain an elevated cash allocation in response to market volatility and ongoing economic uncertainty driven by the recent macroeconomic and geopolitical developments. Also of note, our private equity exposure has declined due to higher than expected distributions, despite a generally slower exit environment across the industry. Public equities have performed strongly, leading to growth in those allocations over the past year. Meanwhile, allocations to private infrastructure have decreased somewhat as capital has been deployed more slowly than distributions have been realized. We expect this trend to change as new infrastructure commitments come online. The next slide shows a list of investment committee members, investment managers, and general partners that make up the endowment. Now, recently, the Calgary Foundation reinvested in Crescent Capital's fourth flagship North American senior secured direct lending fund. The general partner continues to focus on senior secured lending to non-cyclical sponsored back lower middle market businesses in North America. We also exited more investment management's Canadian equity strategy and allocated the capital to a passive Canadian strategy for the time being. We continue to invest in Moore's global equity strategy. Now, turning to performance, over the first quarter of 2026, the endowment returned 1.4%, which is 73 basis points above both the benchmark and the median balance fund. The endowment tends to outperform during down markets, like seen in this recent quarter. Now, over the fiscal year, the endowment returned a strong 9.7% return, which though was 2% below the target benchmark. This lag was primarily the result of narrow leadership in the North American public equity markets. Market gains were particularly concentrated in a small group of large U.S. technology companies tied to artificial intelligence, whereas the endowment equity exposure has been intentionally diversified across regions, company sizes, and investment styles. Emerging markets, global small cap, and passive public equity strategies delivered robust returns, while Canadian equity and global equity strategies with more diversified and valuation-sensitive approaches trailed their benchmarks. Alongside public markets, the endowment benefits from the investment designed to provide stability and income through different economic environments. Private infrastructure and private debt performed well during the year, supported by inflation-linked revenues and higher interest rates that help cushion the portfolio during these periods of heightened market volatility. Private equity and real estate experienced a more challenging environment as higher interest rates slowed investment activity and moderated valuations. These short-term conditions are a normal part of investing in long-term private assets. Over time, both asset classes have played a very important role in strengthening the endowment, providing diversification and resilience alongside public market investments. In particular, private equity has been a strong contributor to long-term results, helping support growth and stability across full market cycles. Now, over the 10-year, the portfolio return surpassed the median balance fund by 54 basis points and is in line with its benchmark. The endowment has also achieved its 10-year real return objective over rolling 4-year periods. The endowment has outpaced the median balance fund in 4 out of the past 5-year periods. Now, our priorities for the coming year include wrapping up our comprehensive asset optimization study to ensure that the endowment remains well-positioned to support the community over the long term. The study evaluated the endowment's current asset mix under a range of economic and market scenarios, with a particular focus on balancing long-term growth, risk management, and liquidity needs, and any changes will help strengthen its positioning. Building on this work, the 2027 fiscal year will also focus on a detailed review of each asset class, including their underlying structures and investment strategies, to ensure they continue to align with best practices and evolving market conditions. Where appropriate, the foundation will implement refinements identified through the review and the asset optimization study, taking a measured and deliberate approach that remains consistent with its long-term mission. Once complete, the recommendations from the study will need to be implemented and might result in a refresh of some manager relationships. We may also choose not to reinvest in some funds when strategies might be expected to underperform others over the longer term. Overall, we intend to move cautiously, especially given growing economic uncertainty, and we intend to remain methodical and prudent, particularly when pacing alternative investments. Please feel free to reach out to the Calgary Foundation's team if you have any follow-up questions about the content of this presentation. Thank you for your continued partnership